Hello and welcome to another video as part of the technical analysis series, and this is the updated lesson on horizontal support and resistance levels. Usual disclaimer, please read through it. I'm not a financial advisor and this is for entertainment purposes only. If you're happy with that, let's proceed. Usual shoutouts to Trader Dante, Trader 1SZ and WMD Forex. Excellent stuff, lots to work through in terms of price action material for further reading. Outline what we're going to cover today. We're going to go through some general remarks. We're going to go through TradingView and see some quick tools you can use to make your life easier when it comes to drawing these levels. We're going to go back to concepts and talk about the different types of levels that exist and the three key principles when it comes to support and resistance more generally. We're then going to cover what actually makes a strong level and a quick drawing tip to be more precise with our entries and exits. We're going to talk about what trading the inverse means and the two different types of retests that I trade myself, and I'm going to round off with a quick note on timeframes and the conclusion. General remarks, and this is important because it extends beyond just this video. In my experience, the overwhelming majority of systems or techniques or concepts that marketers, books, gurus, podcasts, whatever, try to sell you are, for the most part, some variation of support resistance, or SR. So if you get a good understanding of SR, which you will if you watch this entire video, all the stuff, or at least the majority of the stuff that you learn in the future, unless it's some really kooky non-price action stuff, will make a lot more sense. Second point is, when it comes to drawing levels, it's more of an art than a science, though as I said, we will cover some things you can do to be more precise. Third thing is, and this is a very common beginner mistake, do not try to force levels where they're not clear. Okay, so your highest probability structures or setups will come from clear levels that are worth waiting for. If the market doesn't have them at that time, or doesn't show, or isn't showing you a clear setup, don't force one just because you want to take a trade. Your patience will be rewarded, as with many things in trading. And the last thing is that even if you think you have a good grasp of support and resistance concepts, I'm sure you can still learn something new in this video, and it'll be very well worth your time. TradingView Setup, nothing too crazy, really three things that I use. So number one, the line tool itself, you can either Alt plus H, or it's the horizontal line under the line category that you can then move around. That's number one. Number two is magnet mode. If you're trying to position your level based off of a specific open, high, low, and close of a candle, magnet mode, as you can see, will snap towards the open, high, low, and close of whatever candle you are basing it on. So, as you can see here, very useful. And the third thing is that if you're doing analysis and drawing levels on multiple time frames, there's a good chance that you don't want your lower time frame levels to clutter your daily or your higher time frame chart. And so to do that, once you've drawn a level on a certain time frame, you can simply double click, go to visibility, and you can choose which time frame it appears and doesn't appear on. So if this is an hourly level, for example, and I don't want it to clutter my daily time frame analysis, I will simply untick daily and it will disappear from there but stay on the lower time frame, which is very helpful. So let's move on from that to the more exciting stuff. There are four different types of levels that you should ingrain in your mind and be familiar with. So on the left hand side, we have only resistance and only support. Okay, so this is our level. You can see price comes into it, sells off, comes into it, sells off, comes into it, sells off. So if you're completely new, resistance is just an area where we expect that the market will resist price from going any higher, or where we expect the sellers to step in for that to happen. And the opposite, which is support, well, a level, it's an area on the price chart that we expect to support the price, so keep it from going any lower, and or for the buyers to be stepping in. As you can see, buyers stepped in on each bounce. Now the structures on the right hand side are slightly more exciting, and the ones we'll be spending a lot of time talking about, so very much worth familiarizing yourself with. And these levels are essentially SR flips, okay, so support resistance flips. As you can see, you've got the same level, which started off by providing resistance, but on this move, it actually broke the level, and then you had what was resistance at this point turning to support. Okay, so the level flips. The levels flip if they're broken. Similarly here, instead of just going support, 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 you have support, support, broken, and on the break of a level, it flips into resistance. So I'll cover this in a lot more detail if it's completely new to you, but these are the structures you want to be aware of. And this brings us nicely to principle 1 of SR flips. And that principle is that support resistance levels flip when they are broken by price. Okay, so what does that actually mean? It means that a support level that is broken turns to resistance, and a resistance level that is broken turns to support. So we can use the same levels or the same structures for both buying and selling under the appropriate circumstances, right? Which will be clear in a second. And by broken, I mean a candle close through the level. So let's look at some examples to make this really clear. So here we have a dollar index daily chart. We have this level 96.50s, not mega precise, but just look at the zone we're in. You could even highlight it like this if you wanted to, if it's any clearer. Either way, if we look at the structures here, price comes into the level, you get some wicks and a sell-off, resistance. Price has been resisted from going any higher. I don't know if that's good English, but I'm sure it makes sense. And then price comes into the same level again, more resistance, so sellers stepping in, price going lower, and then when it's broken by this candle, right? Notice the difference. You have wicks, no candle close through. Wicks, no candle close through, and here you have a clean, convincing close through the level. And we know from our slides that broken resistance turns to support. Resistance, resistance, broken. What do we anticipate? The same structure, the same level to be used as support as it is here, and then you get continuation. Okay? Let's look at an example of the opposite, or the other side of it. We've got Bitcoin dollar 4-hour chart. Same principles. You have, well, support here, support, 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 and then and you can see again wick, 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 and here you get a clean close through the level. And so support, when it's broken, what does it turn into? The same level flips into resistance. You can see you get a nice rounded retest into it, and the same level that was previously used for buying, keeping the price up, is then used for selling before continuation lower. So that's an SR flip. When a support is broken, the same level flips to resistance, and when a resistance is broken, the same level flips to support. Really important. Let's move on. That's principle 1. Principle 2 is about recurring tests. Namely that the more a level is tested from the same direction, the weaker it becomes. Which might sound confusing or novel to some of you, but this is one of the most key yet confused concepts when it comes to SR. If price tests a level or a structure, whatever it may be, repeatedly from the same direction, it gets weaker, not stronger, with each test. And a good way to think about that is almost from a supply-demand perspective, that if you have a resistance level that keeps being hit over and over and over again, with each test of that level, some of the sellers well, yes, some of the sellers are being absorbed until finally, when price comes into it for the nth time, whenever that may be, they are overwhelmed and price breaks through. And of course, the opposite will have to be true as well. Let's take a look at Litecoin Daily here, a good example of this. So what we have is support here, support, and then it really gets quite crowded. You have support again, support, support, until it eventually breaks through on this candle. Now the important thing is, at this level you have some buyers here, okay, quite obviously you get a nice reaction, more buyers are absorbed, even more buyers are absorbed, even more buyers are absorbed, even more buyers are absorbed, until finally the sell pressure, let's say, surpasses the buying pressure, or more buyers are absorbed enough so that the price is the level is broken by price here. Okay, so almost the easiest way to think about it is kind of supply demand type of mechanics, that if it's being tested from the same direction, eventually the buyers who are holding this level up are going to tire out until they're overwhelmed. Okay, and of course the opposite is true as well. Now this is an SR level, but I've drawn it like an intraday cluster. So obviously your cluster price structure, you have a impulse move, then you have a consolidation, which I can draw better than that. You have consolidation, and then you have an impulse move again. So the consolidation is a key area that we're looking to keep an eye on. And as you can see, you have 1 test, 2 test, 3, 4, and on the 5th test you get a really strong breakthrough. But with every single time price came into the level where we expect selling, some of the sellers get absorbed. Some were absorbed here, more were absorbed here, more were absorbed here, and on this test the buyers overpowered the sellers who had been essentially fatigued by keeping price below this structure 3 times prior. And more, of course, if you count the little wicks and all of that. Okay, so this is a really important principle. A lot of people kind of looking at, certainly at the Litecoin example, would be thinking, oh look, we're coming into the same level and it's held up 3 times. That means it's really strong. No, it doesn't. It means that with every subsequent test, more buyers or more sellers have been absorbed. And so your probability gets lower with every test of a structure from the same direction. Okay, that's really key. So what do people mean when they say that a good level or a strong level is one that has many touches? Well, I think it's this. I think this is where the confusion arises. So while a level that's tested by price many times from the same direction is weaker with each test, as buyers or sellers are absorbed, it becomes strong if or when it flips. Okay, that's the key difference. So with this example, you have, for resistance, and then when it's coming into here, a lot of people are going to think, oh look, it's been held up twice, that means it's a strong level. It doesn't actually mean that. If anything, I'm thinking to myself, okay, this isn't good. We've already held down this level twice. This is the 3rd test. We absorbed some sellers here, we absorbed some sellers here, and with every subsequent touch, it's lower probability. And then once that's broken, and as price is hovering back down towards it, that's when I think everyone who was selling here, they've now been overwhelmed by buyers, and I expect the same level to flip and to continue. Okay? Right. And so the 3rd principle is a logical corollary of the second one. So the highest probability level trade is the first test of a broken level from the other side. Okay? What does that actually mean? And that means your highest probability setup is the first test of a broken resistance, where we expect support, of course, and the first test of a broken support, where we expect resistance. Logically, this should make sense. So the probability of a level holding decreases with each test from the same direction. Okay, so one's odds are enhanced when price tests an SR flip for the first time, before any buyers or sellers have been absorbed. And just as a short note here, any subsequent tests are lower probability, but can be taken if your rules permit it. Like if there's confluence or divergence, Fibonacci, whatever you want to call it. Okay? And I call this first test, best test. So let's look at it from a price chart example. And I've got a couple of sort of live charts where the level hasn't played out, but it's certainly quite good looking and I'm keeping an eye on it. So. Let's look at this structure here on Litecoin Bitcoin Daily. You have 1 touch resistance, big swing away, 2 touch resistance, 3 touch resistance, and arguably 4 touch resistance anyway. So resistance, 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 and then on this candle, the resistance is broken. Okay, so what actually happens on the, let's say, the close of this candle? Well, we know that broken resistance turns to support, okay? And so as price is coming down into here, I'm counting that as a support level. If we take the principle we covered just seconds ago, we know that the first test of a level is your highest probability setup. So you can even ask yourself, hey, now that this level has been broken, we expect 101.47s to be support. Okay, how many times has it been tested? And the answer is 0. Okay, so we know if it gets tested 1 time, the next touch is a lower probability. So 1 is better than 2, which is better than 3, which is better than 4. Because with every single touch, in this case, more buyers would be absorbed. But as price is coming into it now, on its way here, how many times has this support level actually been tested? And the answer is 0. Because all we had is a clean break, no retest up until now. And so that's where I sort of get the principle of first test, best test. Because we know that with every subsequent test from the same direction, a level gets weaker. How many times has this been tested? 0. You simply cannot get better than that. The zone is fresh. And anything after 0 will be lower probability. Okay, that should make sense. Let's take another example on the dollar index. We have some nice clean lows here. We have a low here. Ooh, that's ugly. Here, 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 and here. And so going back to our very first principles, support when broken, what does it turn into? Resistance. So you have wick, 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 wick. Clean break, very clean break of the level here. Complete dumpster, okay? And so what does that mean? That means this level that was support, as soon as this candle closes, though not necessarily it could be before, but let's say as soon as this candle closes, support has become resistance. Okay, and Cred has also said that with each subsequent test, from the same direction, a level gets weaker. So if this support broken turns into resistance, the next question is how many times has it been tested? Well, the answer is 0. Okay, so it's at its freshest on any pullback right now. And that is your highest probability trade. So this is something people get confused. A lot of people, when I say, for example, that, hey, this is now resistance, they'll say, well, how do you know? Because we haven't come back and tested it. Surely you want to wait for a test and then do something like this. And the answer is no. It's confirmed or proven as resistance the second it breaks as support. That's evidence enough. It was support. When you get a clean breakthrough, it's automatically become resistance. And what's your highest probability setup? Well, as we know, I would rather take it when it's got 0 touches and it's at its freshest. It's better than 1. Okay? Someone's going to say, screenshot this out of context and tell me I'm shit at maths. But for our purposes, it's a higher probability short if it's got 0 touches and it's fresh than if it's got 1 touch, which is then better than if it's got 2 touches, which is then better than if it's got 3 touches. Okay? That should be clear. First test, best test. So now that we've got these principles in mind, we can kind of put them together to get an idea of what actually makes a strong level. We've got a few categories. The first one is a high number of touches once the level has been broken. Okay, as we've established, if a level has got a high number of touches from the same direction, that doesn't make it stronger. If anything, I'm gambling, thinking, okay, maybe this. I'm kind of hoping that the sellers will be able to absorb another bout of selling, or the buyers will be able to absorb another bout of buying, right? We know that the fresh test is the best test, so if a level has a high number of touches from the same direction, that's not good. But as we established with our previous examples, if it was a level that had a lot of touches and that's been broken, it turns from a used support to a fresh resistance, or a used resistance to a fresh support. Okay, that should be really clear. So as I say here, more touches from the same direction is a weaker level, but once the level is broken and price is on the other side, it's fresh. And that's where we get our best setups. So high number of touches, as long as you're on the other side of it. Okay? Second category is violent touches. Again, once the level has been broken. Violence is simply how strongly price reacted upon testing the level, and we want evidence that we're going to bank some nice money, get a nice bounce coming out of our level. So we want violence, and we want proof that the market is going to push away from where we bid or where we offer. The third one, and probably the most important one, and the one people get wrong quite a lot as well, is that we want to base our levels on recent price action. Okay? It's really tempting to sort of read a price chart from left to right, because that's how we're used to reading and it's kind of natural. But since the price chart and the data is formed obviously from left to right, your more recent data is on the right-hand side of the chart. Okay? So reading the chart from right to left, as Tom Dante suggested, well, to me at least, and to all his other viewers, reading the chart from right to left is actually a nice way to make sure that you're in tune with the recent price action, what the market participants are looking at now, as opposed to what they were looking at a few weeks ago. And the last category is a strong level is one which has been in play for a long time, and again, once it's been broken. So if you have something that was resistance only for a few hours, once it's broken, we can't really expect it to hold as support, as well as, for example, something that was resistance for weeks and has finally been broken by price. Okay? And so a good level has all of these. Obviously, the more of these it has, and the more recent it is, the more violent touches, etc., the better. Okay? And when it comes to a drawing tip, a lot of people are going to ask, do I use wick, candle bodies, etc.? It doesn't really make a huge difference at the end of the day, but what I would suggest is refine your level by making sure it is hinged on the most recent lows before breakdown, or the most recent highs before a breakup, right? So for example, I don't think I have a very clear example here, but either way, this will make sense when you're looking at it. The lows or the highs won't always be lined up perfectly. So if you're figuring out where to hinge your level, pick the last place, the last little wick as part of the structure where price found support before breaking down, or the last wick, last little bit of resistance in the structure that price found before breaking up. So, and all that is just giving precedence to the more recent price action. That's all. Nothing too crazy. So trading the inverse, what does it actually mean? Well, let's do a quick recap. The more a level is tested from the same direction, the weaker it becomes with each test. Clear. We also know that SR levels flip. Broken support will turn into resistance, and broken resistance will turn into support. So, when an SR level flips, the first test from the opposite direction is a higher probability setup, as I covered in the dollar index example and the Litecoin example. And what that means is the first touch of price returning to a broken resistance and the first touch of price returning to a broken support. So, putting all that together, how do we kind of frame the market? Well, the easiest question to ask is if you're looking for shorts, are there any broken support levels that are above market or above the current price? And if you're looking for longs, we're saying, are there any broken resistance levels below market or below the current price? It's really that simple. And so all trading the inverse means is we want to buy broken resistance, which we anticipate is going to act as support, which is why we're buying it, and we want to sell broken support that we anticipate to act as resistance, which is why we're selling it. Retests. As you can tell, for all of these concepts, we're talking about resistance turning to support, or support turning to resistance, which suggests some sort of retest or retracement to the level that's been broken. And that's obviously implicit of a retest. So how does this retest actually look like? What should it look like? How do you trade it? I keep it relatively simple and trade two types of structures. So one is I call a micro retest. Okay? And so this is usually seen and traded on lower time frames, and these kind of micro retests occur virtually immediately after a level is broken. And in some cases, the pullback doesn't even come back to tag the level itself. And the defining characteristic of a sort of micro retest is, as I mentioned, it occurs virtually immediately after a level is broken, but also for that reason it is for that reason a lower probability setup, because you've got no higher time frame proof that the level is broken and it's going to hold as resistance turn support or support turn resistance. So here's an example of a micro retest. We have cable here on the hourly chart, and we have some lows here, here, and then specifically this kind of structure I'm looking at. Low, 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 and you can see the level is broken. And so it's broken here, and then only 1, 2, 3 hours later, it's quickly retested, and that sells off, right? So if we're zooming in here, the reason it's a micro retest is because there's virtually no time between the break of a level and its retest. And it's lower probability, as I mentioned, because you have no real proof that it's actually going to hold as resistance, and that's because you don't know if it's actually been a real break, right? So as we'll see with the other example, if the level just breaks and price just floats around well below it and then comes back, the fact that it's moved away from the level so much is your proof that it's broken. Whereas here with a micro type of retest, even if you get a higher time frame candle close through it, that's not as good evidence that the level has broken and thus flipped. Okay? And that brings us to rounded retest, and these are visible on higher time frames, and they occur where there has been time and space between the break and the retest. And for that reason, as I mentioned here, they are higher probability because you've got higher time frame proof that the level has been broken, and then we can more safely assume that the level has flipped. Example being here on Ethereum dollar daily chart, if we have our resistance type of structure, don't have to be too precise for our purposes here, in the form of highs, old highs, 1, 2, 3, old highs are broken. It does get retested here on the daily time frame, so you probably do have a lower time frame micro retest, but this is what I mean by rounded retest. You can see it breaks out and spends all this time away from the level until it eventually rounds back towards it here. And these tend to be your higher probability setups, because once price does all of this, there's no doubt that this resistance has been broken, and we can safely anticipate that it's going to act as support. But this also goes to show that you don't need to either pick or choose whether you want to trade micro retests or rounded retests. Because as you can see here, you could have made money on the lower time frame micro retest, but then also once price has finished all of this and is coming back towards the level, you could be aware that there's a rounded retest in play as well. Which is why I suggest personally, just based on your preference, risk appetite, whether you like lower time frame stuff, and of course the notes from your trading journal. A quick note on time frames is that generally, as with most things I suppose, higher time frame levels are more reliable than lower time frame levels. However, the frequency of the setups will be considerably reduced if you only trade daily and above in terms of time frame, right? These levels don't form as often as you would on, for example, an intraday time frame like the hourly. So you essentially, as I mentioned at the end, have a balancing act where you have to choose between quality, which the higher time frame is going to give you, but also setup frequency, which the lower time frame is going to give you. And through trial, error, practice, and making notes in my journal, most of my levels trades come out on the hourly time frames and the daily time frames. And that's it. Let's go through the conclusion really quickly. Understanding SR and SR flips will make most price action concepts that you go on to learn much easier to learn and understand. Don't forget that testing a price structure from the same direction repeatedly makes it weaker. It becomes strong only when or if it's broken, right? I'm sure I've beat that horse to death. Same direction, it's weaker with each touch. Once it's broken, now we're in business because it's flipped into a fresh resistance turned support or support turned resistance. And the cool thing, of course, about horizontal SR is that it's easy to add tools to confluence this method, fibs, indicators, other price action structures like your clusters, blocks, and everything. It just slides in very nicely in a price action or even indicator-based tool set. And that's it. Thanks for watching. If you learned something new or enjoy making your way through the technical analysis video series, consider leaving a Bitcoin tip if you enjoyed it. Thanks for watching, and I'll see you for the next one. And just a general thank you to you guys for the crazy support over these weeks, months, whatever, and I look forward to providing more value to you and interacting with you all. Thank you very much. I'll see you for the next one.